Hey traders, Mike here. Welcome to my weekly Trader Psychology live stream series where I help you with the mental side of trading. All right, today what we are going to talk about is my trader's edge, development and strategy. Well, what does that mean? Essentially, what I'm going to share with you is how I have been able to develop my own trader's edge. And I'll talk about that a little bit later. And what I'm going to share with you is in terms of how I developed it and how I've developed that strategy. But I'm going to talk about it from the psychological aspect. All right, so let's get started. Just before I discuss this, please consult your financial advisor before making financial decisions. All right, so let's get started. All right, what I'm going to share with you today is how I've been able to develop my trader's edge. Now, for those who don't know what trader's edge means or what your edge is, when people say, well, what's your edge in the market? Essentially, what do you feel that you are better than others in the markets? Because in the markets, in the financial markets, there are winners, there are losers. So what makes you think that you are more of a winner compared to a loser? So this is where you have an edge in the markets. Now, I'm not talking about, perhaps you have insider information or perhaps you are have access to specific, it could be insider information, it could be a specific knowledge in terms of experience, it could be a specific expertise in a certain area. What is it that you feel that you are better than others? Again, how are you able to do something better than others? And again, perhaps it's because of your background, right? Because you are, for example, you are looking to buy a specific energy stock and you work in the energy sector, right? You know what's going on, you know what the catalyst could be, you know how that's going to happen. So you have an edge, you have an advantage over someone, let's just say like myself, who doesn't really understand the energy sector as much as perhaps you are, and therefore you have an edge. So this is kind of what I'm referring to is how can you develop your trader's edge? And I will share with you exactly how I did develop this. So the first thing is really at the end of the day is develop your expertise. Now, as I said again, is if you are energy expert because you work in the energy sector, you developed an expertise in understanding how the sector works because you worked in it. You have contacts in it. You know people in it. You work in the sector on the day-to-day basis. So are you at an advantage when you are looking to invest or trade an energy company? Of course you do. Now, it doesn't mean that I can't, let's just say I'm not an energy expert, I can't develop that expertise. It's just that it's going to take me time. And because of my role is I'm not able to have the same access that you have because you work in the energy sector. You have colleagues, you have bosses, you have contacts, you have partners, right? You have all these things that it would take me much longer to develop versus yourself. So what I suggest is, if you are looking for your trader's edge, first of all, is what sector do you work for? What company do you work for? Do you have a specific knowledge? Do you have specific access to information, to knowledge that perhaps it may be harder for someone who's not working in that sector? So that's what I always suggest is, especially if you have already a strong background in something, start off with that first because you already have an edge over others. Now, if you're saying, well, I don't have, any, I work in the, let's just say, for example, I work in the, I work for the government, for example. I don't really have access to certain specific industries or certain knowledge or, et cetera. Then find an area that you really like. I'm sure, again, throughout your day-to-day life, you have exposure to specific areas of sectors or, again, companies. It could be, for example, you own an iPhone, right? You are familiar with it. You understand the company, and you really want to delve in deeper. Hey, when's the next iPhone coming out, or what's the next new technology coming out, or what are some things that you, due to your access to this technology, being able to gather this information, gather this knowledge. So again, the first thing is develop your expertise, and that's where you can get an edge in the markets. All right, the second thing that I want to share with you is developing your trader's edge is find repeatable patterns. Now, what do I mean by that? Essentially, it could be as simple as looking for chart patterns, right? Looking for a double top, looking for double bottoms, looking for head and shoulder patterns, looking for symmetrical triangles. Like, look, find specific chart patterns that you feel it resonates with you more, or you feel that it happens more often, and all you really need to do is keep repeating the same pattern, right? Keep finding the same patterns. And again, I'm not saying that you're able to find these patterns every single day, but what I'm trying to say is that keep looking for these repeatable patterns, so that therefore you're able to strike when the pattern appears. So it's more of, how do you develop this edge, is because you are looking for something specifically, and when it does happen, you are able to pounce on it, versus people scanning for specific opportunities and then didn't realize that this exists as a pattern, and then it was too late, but you're already in. Now, another thing could be in terms of repeatable patterns, not just in terms of price action or looking at chart. Just look at repeatable patterns in terms of how generally the market moves. Now, for example, you were to look at patterns in the last couple of years, the market basically has been going in one direction, going up. So you can assume that, okay, well, if the pattern doesn't change, then we should expect the pattern to continue going higher this year. So not saying that it will, but you essentially look for patterns that continue happen, right? Or let's just say the trend is up, wait for the trend to change before you get out. Now, if the trend doesn't change, then essentially stick with it. Or something, some patterns, for example, could be, you notice that every time that you, um, trade this specific company, it has a specific catalyst, right? For example, when a company generally reports or releases new products at a certain date, generally the stock will rise before it, and maybe perhaps keep rising once the product has been announced, and then it reverses, right? So look for any type of specific pattern that you see continually that happens over a yearly basis. Again, not saying that every quarter or every month, but look for patterns where you can see that the same situation happens over and over and over again, and all you need to do is just wait for those patterns to emerge and then be able to get in. So again, that's your edge, because you are able to identify patterns that are repeatable. All right, the third thing that I want to share with you guys is wait for the right opportunity. And this is what I mean by that is being patient, waiting for a specific opportunity that you are looking for, waiting for something that you expect to occur, and then when it does occur, you take action. So this is where the edge is in your ability to not be impatient. The edge is being able to identify something that you are waiting for that maybe perhaps is repeatable. Maybe perhaps again it's an ideal scenario. Wait for that opportunity to appear and not get in too early. Wait for the opportunity to appear and then get in. So again, the edge that I have developed is I know exactly what I am looking for. Throughout my 25 plus years of experience, I've made a lot of mistakes, right? I've made a lot of mistakes, but then I go back, what are the things that keep working for me? What are those repeatable patterns? What are those things that result in generally a profit more than a loss. Now, when I identify these things, all I really need to do, quite simply, is I have this historical data that I have. I look to see what's working, I look to see what's not working, and all I'm really doing is looking for the things that are working and waiting for those scenarios to appear. So when those scenarios appear, I take action. So my edge is I know what opportunity to look for, and all I'm doing is waiting for that opportunity to appear, and then I take action. So hopefully, again, you'll be able to kind of resonate what I'm trying to get at. And again, especially for those who have experience, keep doing the things that make you money. All right, the next one I want to share with you guys is kind of similar what I said already. Keep trading the same profitable strategies. Okay, what do I mean by that? And again, I kind of said this already. Is if you have identified a specific area that, or in terms of strategy, in terms of a specific trading instrument, or a specific type of pattern, or a specific type of technical levels, that type of thing. If those are working for you, keep doing the same thing. If you are trading NVIDIA and you keep making money on NVIDIA stock, keep trading it. If you are losing money on ABC stock, stop trading it. Again, very, very simple. Okay, keep doing the things that are profitable until they are not. Now, obviously, you don't know, but it's really, like I said, very simple. If something is working for you, just keep doing it. Don't look for different shiny objects. Don't look for try to new strategies. Don't try to trade something different. Look to keep doing the same things that you are doing on a daily, weekly, monthly, or even yearly basis until it doesn't work. Okay, and that's also my edge, is I keep doing the things that are working. Obviously, when things don't work out for me, I have to stop. And again, that could be also the edge that I have, is I'm able to remove myself and stop doing the things that were making money for me before, but are not making money for me anymore right now. Okay, next one I want to share with you. Know your trading style. Okay, this is what I very, very important, is know what type of style, know what type of approach that you have in the markets. Are you very, very short term, like you scalping in and out? Are you trying to intraday trade? Are you a swing trader? Are you a position trader? And then you would say, sometimes people, some of my students would say, well, it depends. Well, you have to know what your style is. You got to know how comfortable you feel trading a certain style. Like, for example, some people just only want to be day trading because they just fear of holding anything overnight because of something might happen. And they fret, let's just say, if they do hold overnight and something that bad happens to them, they immediately blame themselves, right? Because you you accept that reality that, hey, you're day trading, you don't like overnight risk, but then you held over and it doesn't work, so you again blame yourself. So that's not your edge. Your edge is knowing, okay, I'm a day trader, I'm not going to hold anything overnight, and there will be circumstances where you don't hold on anything overnight, and actually it goes in your favor, in the next day or a few days or a few months, and you say, oh man, I should have held. No, you got to know your style, because it's not a matter of the result. You got to know the style that you're comfortable with, so that you feel that you know how to interpret that style or know how to trade that style. So therefore, you know what you need to do. And again, that is your edge. I know myself, especially when I first started, that I just didn't have the capital to hold overnight. So I was just basically focused on day trading or scalping, right? In and out, in and out. Now, when I first started, It was quite profitable because the markets were definitely a lot slower at that time. So that's kind of how I started. But then once I started realizing, hey, instead of scalping in and out, why not try to hold it a little bit longer? And if I held it a bit longer, it made me more money. So then I started realizing, oh, okay, this is working. And then I started, holding overnight, and it started working, right? Or sometimes it didn't work. So, not saying that you shouldn't change your style or your style wouldn't evolve over time, but don't get into a habit where you're saying, okay, I just want to scalp quickly, and then suddenly you switch to holding it over a long period of time just because it's not working for you. So again, what I'm trying to understand is, don't keep changing your style on just specifically one trade. And perhaps there are certain opportunities where, yes, this is long term for me. This is an investment for me. So I'm going to approach it in a different way versus me just trading this stock in and out. Okay, so that's what I'm trying to get at. Now, the next thing, two more things that I want to share with you before I take any questions from you guys, is know your trading stats. And again, very, very, very important, especially if you are an experienced trader. You got to know, what are you doing right? What are you doing wrong? And the immediate way to increase your P&L is quite simply, do more of the things that are making money for you. Do less of the things that are causing you to lose money, and voila, you have a higher P&L. Okay, profit and loss. So hopefully more profits. So, but how do you know what is working and what's not? And this is where you look at your stats. Look to see what type of profits that you generally generate. What's your risk reward ratio? What's your max loss? What are the average losses that you make? What's your win loss ratio? Are you on a consecutive losing streak or winning streak? All these type of things, all this data is going to tell you like I said, what you're doing right, what you're doing wrong, and it will guide you what you should be doing. Okay, so that's what I really, really want to emphasize is, you got to know your stats, especially if you have stats. Okay, you have trading stats. Therefore, when you can look at your stats, you'll be able to know what you did. And I can tell you, in terms of developing my edge, is when I first started, I didn't know what I was doing right, what I was doing wrong, because I was not looking at my stats, and I was not reviewing, I was not doing my trading journal, I was not doing anything to evaluate what I am doing right or wrong. Then once I actually realized that, hey, listen, I should look at my stats to see what am I doing wrong, and lo and behold, it was so clear when looking at my trade history, I should not have been doing this. And I can tell you that a lot of it was over trading, and also a lot of it was I was taking profits way too early. Okay, once I corrected that, suddenly my P&L increased and my confidence grew. So look at your trading stats to develop your edge, or to know what your edge in the markets is. All right, the last one I want to share with you is kind of very, very general, and I'll talk about a little bit in terms of a specific concept, is to understand market psychology. So what do I mean by, excuse me, what do I mean by that? When I say by market psychology, is essentially understand what the market is overall thinking. Now, if you have been trading the past few days in the US stock market, you would have probably seen that the market has been falling. Okay, so you can see that the sentiment in the market is quite negative. If you are a buyer of the markets, you would probably been hurt this past week, just because generally majority of the stocks have been falling down. Now, obviously not all of them have, but in general, all of them, or a lot of them, have been falling down. So if you understand the market sentiment, the sentiment is that the market did not like the employment report. The employment report was much better than expected. Now you're thinking the market reported much better employment report, but yet the market fell. Well, the reason why the market fell was that because the prospects for employment were much greater than expected, the US Federal Reserve, who determines interest rates, has no great incentive to lower rates. And perhaps maybe either lower rates at a less aggressive state, or in fact not lower rates, and maybe the worst case is increase interest rates. And this is not good. Okay. Now will be circumstances where, or perhaps the circumstances is, if the report was bad, the market would rise, just because, again, the US Federal Reserve would probably have a propensity to lower rates because the employment report is not good. So they want to increase, to drive more job growth, right, by lowering interest rates. So when I mean by understanding market psychology is understand what people are thinking, understand how the market is reacting to the data. Then you can make your decision on what to do. So if the market is not reacting well to this, follow what the market is. Don't think just because the data is good, follow what the market is interpreting that as. And that's kind of your edge in some sense, is you're not trying to interpret what you think the data means. You are interpreting how the market reacts to that data. And that's the difference. Okay. The difference is your edge is trying to develop an understanding, how is the market reacting to this. Now, obviously, you can have a certain bias saying, okay, well, if the report's good, then it should happen this way. If it doesn't, then respect the market and follow what the market says. So really simply, what I'm trying to say is, don't try to make your own assumptions about the markets, is follow what the market says, is because the market is always right. All right, guys, so before, if you guys have any questions, please type the question box for me in the chat box beside you. Next week, I will be talking about how I have been able to master the mental side of trading. Again, it's more in terms of me going through a little bit more detailed in terms of specifics on the mental side, because I can tell you that I've made a lot, and I mean a lot of mistakes in trading over my 25 plus years, and it's not necessarily due to just because I didn't have the knowledge or I didn't have the experience, or I didn't have proper risk management, or I didn't know how to do something properly, or all those things, right, that contribute to me not having success. It's more of what was here. There's something that I had struggled with. There's certain things that if you approach it in a not well aware or strong enough state, that the markets could kill you. And again, unfortunately, I have seen so many people, so many traders who go into the markets really positive and leave the markets either empty-handed, their accounts depleted, and here wrecked. Okay, so what I want to share with you next week is some of these things that I've been able to overcome, and for you to be aware of, especially when you are trying to generate profits or trade the markets on a daily basis or weekly basis. All right, guys, if there's no questions, thank you all for attending today's live stream. I hope to see you guys next week. Again, please feel free to comment any questions that you guys have. I usually check the comments boxes quite frequently. So again, if you have any questions, please feel free to type them there. All right, guys, thank you so much for attending. I'll see you.